Hi, welcome to the Market Alert for Monday, the 13th of April 2015. And starting off in the 5-minute chart, we have a potential signal here, but this is bang on the 2:30, as you can see in the top there. It says date and time. So this one is a tricky one because we don't know which way the market's going to go, but had you have traded this one, you can see the market moving lower there, trading down to the psychological level of 17,950. I personally didn't do this one, waited for the market to see what it would do, and you can see there that the market's got that support at the psychological line, and then we get the first signal to the upside there. Market struggling with the psychological level here, but eventually managing to hit the scalp, and at this point, as the market had resistance to the left, it was a case of deciding to take the profits at the scalp level. This signal here, this one became invalid. I can tell you now, as I was trading, that the market actually hit the stop before it hit the entry. But because when you save open a saved workspace, the market isn't live and it doesn't know whether the entry price was hit first or the stop loss. Well, in this case, I can tell you the stop was hit first, and that's why you've got this clear triangle showing the circle's hollow because it's showing you that the software doesn't know whether the entry price or the stop was hit first in the bar following. So what we've got here is that the entry and the stop loss would have both been activated in the same bar following, but the software doesn't know which it was, but I can tell you it was the stop. So 20 points in this trade, and then we're off up to the upside there in the next one, with the market closing above the 18,000 level, of course. So you see the market hit that, and then we trade up to the psychological level through the scalp there, which is around 38 points in the second trade. The market goes quiet for the afternoon. We then get a potential sell signal there that is filled. This is followed by a buy signal to the upside, and in this case we see the market putting in a loss of around 12 points on this one as the market switches. We've got the buy signal here that came in immediately, and we see the market trading up to the 18,050 level, failing to hold and then coming back. We're already buyers of the market, so these two signals here are invalid. This one then becomes valid with the triple X there. Just draw that in, and you can see there the entry price is more or less around the same price as the entry to the upside, so not too much lost on this trade. And then finally, the last trade of the day, we can see the market trading higher there, but failing to get towards the 20-point scalp. So again, looking at the worst possible case of a break even on the day. In the daily chart, we can see that the market moved higher, traded up to the 76% that we drew in on Friday's market alert there. The market just sitting above that. Recording this on a Sunday, so we don't know what the market's done on the overnight. As far as news is concerned, there is no news for Monday, so the market is going to be left to its own devices to find direction. That's going to be down to either some form of buying and selling by the institutions. So again, it's a tricky one to call, but at the moment the market is definitely along and trying to get back to those all-time highs as well, which we see there at 18,280 as well. So you can see the market heading back towards that level. The only thing that I would do is just put in from the recent high down to the recent low, put in the 76% retracement here to the upside, just to see where the market is going to find some resistance as prices move higher there. So that's it for the markets. The implied volatility also lending support to the market moving high. You can see the implied volatility at 1162 for Friday. The market dropping off quite sharply there, down below the 12%. 10% is the area where we generally get corrections in this market. And I also did see an article over the weekend where they were talking about the volatility index, the VIX. It was also at 4-month lows as well. So when we get into those sorts of lows, we can expect some sort of a correction, but I wouldn't expect it until we get towards the all-time highs again. Right, that's it from me for today. I'll see you in Tuesday morning's Market Alert. As ever, thank you for your support. Very much appreciated. Let's hope that the profits continue as they have done for the last week. And as ever, thanks for watching. See you in the next one.